There's a big week ahead, folks, this week with 4 central bank meetings. I want to shoot you guys all of the data that's going to be breaking down this week here at Capital Markets. Traders, what's going on, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having a great week, and it's an exciting week this week. We have the most packed week in regards to the central bankers meeting and speaking about what they think about markets today. So I want to make sure you guys stay up to date on the information. You guys can be subscribed here at Capital Markets so you can get the data delivered on a continuous basis. And if you guys ever have any comments, please comment down below. We'll be right here to answer them, okay? Monday was a pretty calm day, but today we're starting the week off with ECB meeting and current accounts coming in from the NZD. Now, Draghi is going to be speaking today a little bit about what he thinks is going to be happening in regards to the quantitative easing policy and his bond buying regime. He's going to be saving a lot of that for Wednesday, and that's where everyone is going to be having certain meetings. So you have the US dollar, the Japanese yen, the Aussie dollar, and the euro all meeting on that same day at 9:30. At a big event, all right? So all those guys are going to be going together and going in on exactly what they think the markets should be looking like if one economy starts to raise rates and another economy starts to raise rates. Based off of globalization, that's going to definitely impact the flow of cash, all right? So they like to set the stage as to what everyone is interpreting the market to be in the next few months and how they're going to be reacting amongst each other in regards to the rate raises that are potentially about to come. Draghi last week mentioned that his bond buying program was going to stop in 2019, but he also mentioned that he won't be able to raise rates until the end of 2019, 2020. That's why we saw a massive sell-off over on the Euro USD. Here's a screenshot there. You guys can see markets traded up into the 1840s, but slowly but surely, especially after that Thursday event, you can see that markets hit right back off on the $15.20s. Okay, that is the low or next to the low of the entire year. Now, are markets going to hold this level? We think they are. We think markets are probably going to range inside of the zone up until that Wednesday event. And depending again on what Draghi mentions in regards to what he truly means by they won't be able to raise rates, the markets are looking for a little bit more clarity there. We won't see too much of a move, okay? Outside of that, again, today, we do have current accounts coming in from the NZD. Current accounts represents all of the cash flow exporting and importing into the economy. When an economy is at a surplus, well, that just means that there is a lot of capital, foreign capital, inside of the economy, buying and selling and doing things that are adding to the productivity of the overall economy. Right now, they are looking for a surplus over there in the NZD by 0.58. But if they don't see that surplus, we could see the New Zealand dollar continue its slide. Here's a quick screenshot here of the NZD USD. You can see markets tried to trade higher a bit, but slowly you saw them reverse because of some US dollar strength and again a few bit more data releases that alluded to more NZD weakness. Okay, so we're going to keep an eye on what happens in NZD. NZD data coming out is about current accounts. Current accounts basically represents the amount of investment capital inside of the economy. So if current accounts are low, then that just means no one is trying to buy and sell products inside of New Zealand. But if current accounts are functioning at a surplus, then that just means there's a lot of international investment happening in that economy because that economy has products, services that other economies just don't have. Okay, so let's keep an eye on what happens with current accounts. That's going to be dropping out today. All right. We also have a building permits number that's coming out for the US dollar. US dollar housing market is screaming to the upside. Here's a quick screenshot of where the housing market was in 2008 in terms of the pricing and where it is today. Okay, we are at a full recovery when it comes to housing prices. There are some pockets, though, what I've noticed in doing a little research when it comes to real estate, there's some pockets of the housing market that has not come back. So different high-income areas like California, New York, and Miami, those have skewed all the way back up to where they were in 2008 and higher. But other areas where there maybe isn't so much of a robust economy or robust, state happening, then they just really haven't seen that much of a return in their housing market. So again, we're going to see what happens with building permits. They have been trekking higher, but it's interesting to see how, again, the prices are definitely, there's some that are inflated and there are some that have yet recovered. And that's something that a lot of market participants are looking for. And I want you guys to keep an eye on as well. So again, most of the data that we're going to be cranking out on is going to be pushed out on Wednesday. And also we have a lot of data out on Thursday. So I'll talk to you guys tomorrow. Make sure you guys hit me with all the questions you may have in regards to what's happening in our economies today. If you guys, again, ever have any questions, comment right down below. Make sure you stay subscribed. And as always, folks, Capital Markets is one of the best brokers in the entire industry. We route from some of the best liquidity providers and we have some of the tightest spreads. Okay, you want tight spreads because that means you're going to be paying less and less per trade. Okay, guys, head over to capital-markets.com to get your account started today. I'm Cleveland Bishop. Talk to you guys tomorrow.